Bitcoin and altcoins saw a huge dump yesterday. Now many people think that the bottom is in right now, but is this actually the case? Let's find out. What we can see on Bitcoin is that despite the massive dump and the massive fear that we were seeing yesterday, Bitcoin is simply still trading in this range over here on the daily time frame. And all that we were seeing yesterday is that Bitcoin saw a big dump indeed, but during the dump what it actually was doing was filling the major wick that it put in over here on the daily time frame. Now we know, as I've taught you guys, that these wicks they get filled for 50%. And what we can see when we mark out that 50% wick fill level over here on the daily time frame is that Bitcoin exactly bounced from that 50% wick fill level. Now this to me is a strong sign that the bulls are still in control. Now what this means is that next up we should be targeting the range high liquidity pool again, because we can see that while tagging into that 50% wick fill level, Bitcoin was also tagging into that range low level. Bulls definitely stepped in, a lot of fear was in the markets, and we put in another wick to the downside. Now many of you guys have been asking me whether this wick should get filled as well for 50% or not, and this is not the case. How so? Because this daily candle over here, when we put in the wick to the downside yesterday, was basically filling the inefficiency of this major wick over here. If you in that case put another wick into the downside over here, that wick does not necessarily have to get filled again for 50%. So that one is not in any of our interest. When we go to the lower time frame on the 4 hourly, we can see that around that range high we have a major liquidity pool. We have this high over here, which to me is a major draw on liquidity, and we also have this high over here, which to me is another major draw on liquidity. How so? Look at this local break to the downside over here, and also guys, look at this local break to the downside over here. What we were seeing over here on Bitcoin is two fake break of structures to the downside. Why were these fake break of structures? I should actually be marking out this low, excuse me, because the lows that we break through were insignificant lows to break. How so? Because this low that we break through and also this low that we break through were insignificant because they only were bringing us to lower highs and another lower high over here compared to this high. They brought us to this low, or compared to this high, they brought us to this low. Now lows only become significant if they bring us to higher highs compared to the highs that bring us to that low. Now because we were breaking through these insignificant lows, people are still shorting the price of Bitcoin right over here upon this breakdown, and also right over here upon this breakdown, because they think it are valid break of structures. Now we always have to think that those people that were opening up breakdown shorts, they have to place their stop loss somewhere. Let's say I'm opening up a breakdown short over here. What makes sense in the mind of the retail trader? To obviously use this high to cover your stop loss. How so? Because this is the high over here that we form that starts this impulse to the downside over here, that gives us this local break of structure to the downside. Now therefore a lot of people use this high to cover the stop loss.
The trading world moves fast. Make sure not to get left behind. Subscribe, smash that like button and follow us on all platforms.
And the exact same thing goes for this high over here. This high starts this impulse to the downside that gives us this fake break of structure, and therefore a lot of people were also using that high to cover their stop loss, which means that a lot of the stop losses of the people that were opening invalid breakdown short positions because they don't identify the difference between a valid and invalid market structure break, they are placing their stop loss above the high over here and also above the high over here, and therefore they're engineering a lot of liquidity for us to then target towards the upside. Now another major sign of strength from the bulls, in my opinion, is the fact that we were displacing above this previous bearish fair value gap. So we have this bullish inversion right over here for the price of Bitcoin. Alright, now that in my opinion is a major sign of strength from the Bitcoin bulls, and I think that if we get a pullback within this bullish inversion, this could be a major opportunity for potential longs targeting that range high liquidity pool with your invalidation, for example beneath this range low wick right over here. Now let's move over to my trading idea on our altcoin, and today It's Solana, and this is a very interesting chart. Have a look at the daily time frame. The first thing that I'm noticing is, guys, that we have a major wick to the upside over here. Now we know that these wicks, they tend to get filled for 50%. If we mark out that 50% wick fill level over here, what we can see is that we haven't filled this daily wick over here for 50% yet. So we have already identified our next major draw on liquidity for Solana. What we can also see is that over here at the bottom of the range, we were having another major wick to the downside. If we quickly mark out the range, we then have our range high over here, and we also have our range low right over here. Now what we can see is that Solana was bouncing from that range low level, but more importantly, when we mark out that 50% wick fill level of that bottom wick over here, Solana was exactly bouncing once again, guys, from that 50% wick fill level. Now I've made a separate educational video on this wick fill strategy, guys, and I will leave the link to that video in the description down below. Make sure that after today's video you check out that wick fill strategy video, as it honestly can change your total trading game. Now the fact that we were bouncing from that range low and the fact that we were bouncing from that 50% wick fill level, to me is a sign that the bulls are in control on Solana. Another reason why I'm extremely bullish on Solana and why I will share a long position on Solana soon are the weekly timing statistics on Solana, because we can see that we formed a weekly P1 on Monday yesterday, and then we formed a weekly P2 today on Tuesday. What do I mean by P1 and P2? I mean that if you have the weekly open over here, which I've marked out in green, you first form a low, and after that low you form a high. Here is the weekly open. The low that we form is the weekly P1, because it's the first pivot that we form after the weekly open, and the high in this case that we form is the weekly P2, as it's the second pivot that we form after the weekly open. Now what was very interesting is that we form the P1 over here on Monday during hour 2, and then we form the P2 over here during Tuesday hour 2, which means that we have already taken out the Monday high over here. Now if we mark out the P1 on Monday and the P2 on Tuesday, we can see that the Monday low, the P1, already has a 59.2% chance to hold. We basically always form the P1, aka the weekly high or the weekly low for the week, on a Monday for Solana. It is very rare that we form it on another day. 7 weeks ago we formed it on a Tuesday, 12 weeks ago we formed it on a Wednesday, we have never formed it on Friday, Saturday or Sunday, and last week we formed it on Thursday. But as we can see, with a 3.3% probability, that's a very rare occurrence. Now I told you guys that we formed the weekly P1 also during hour 2, which means during the Asia session, and we can see that basically 44% of the time we formed the weekly P1 during Asia, which makes it an even higher probability pivot to hold. We have also formed a weekly P2 during Asia, which means that it only has a 19% probability to form the weekly P2 during Asia. It is quite likely to form it either during Post, New York or London. What can we take away from this? We can take away from this that the current weekly low, aka the weekly P1, has a high probability to hold for Solana based on the weekly timing statistics, and the weekly P2, aka the weekly high for Solana, has a low probability to hold according to the weekly timing statistics. Now this gives us a beautiful edge, as we can use the weekly P1, aka the weekly low, as the invalidation for our long trade, and now we only have to be looking at potential interesting levels for potential executions. Now I know since we filled this wick for 50% already, we don't necessarily have to fill the daily major wick that we put in yesterday for 50% as well. But regardless, I'm still going to mark out that 50% wick fill level, because if we then move to the 15-minute time frame, we can see that the daily 50% wick fill level exactly aligns with these equal lows right over here. Now as I've touched you guys, equal lows doesn't necessarily mean that there's a massive liquidity pool right there. But what is interesting about these equal lows is that after forming the first low, we had this fake break of structure to the upside over here, and after forming that second low, we have had this fake break of structure over here. We now know, after analyzing Bitcoin, is that these fake break of structures are engineering liquidity beneath the low over here, and are also engineering liquidity beneath the low over here. Now that in confluence with the daily 50% wick fill level means that if Solana is going to take out these equal lows and tag into that 50% wick fill level, this is where I will be looking for longs on Solana with my invalidation beneath the weekly P1. And as a target, obviously the daily 50% wick fill level over here at the range high area, and this offers a beautiful RR of approximately 6.45.